Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Welcome everybody. Let's take a look at the S&P 500. We're looking at the E-mini index futures /ES March 2022 contracts. And we're looking at the daily chart. Now, the last few days I've been talking about January 13th would be probably a cycle low somewhere around here. Could come a little early. Today is Friday the 7th. Okay, so I don't know if the 13th falls on a weekend or not. Doesn't really matter. The point is, approximately somewhere around this date, I would expect a cycle low. Okay, the next one's out here about February 2nd through maybe February 8th. Okay, so be aware of that. But prices are coming down. And I said, are they going to, the last few days I've been talking about how they might track along to 50 or even come below it. Right now, just based on looking at here, guys, I think there's a decent chance that the S&P 500 is going to break below this 50. Which, it's not exactly flat. It's still going up a little bit, but not by much. So that's the reason I say that is because 4670, okay, we finished below that today at 46.67. Okay. And the low was actually 46.53, so it got below it pretty good. But today finished below the 50-day moving average. So that's not a big deal yet, but it may or may not become one. But it definitely finished below it by, 2.5 points. And I think if I had to flip a coin on this, guys, I really think there's going to be more decline below the 50-day moving average. Okay. Again, be aware as we move closer to the middle of the month, I think there's a greater chance of price decline. Now, the short-term indicators, they kind of look like you could get a bounce. I mean, it's possible. It's possible you get a bounce here and get some green days off of this for sure. But whether or not they sustain it all the way through the middle of the month and also going towards the beginning of February, I'm thinking at some point this thing's going to get below the 50 somewhere between the middle of January and like the first week or two of February, that this is going to get below the 50. We'll have to see how it plays out. But right now, I think there's weakness. That's what it looks like to me. Okay. Let's continue to look and move over to the monthly. Not much has changed, except as I've been talking about, there's definitely diversions here. Actually, diversions for quite a while going on. Really, I mean, if you look at this, the more I look at this, if you look at this divergence, guys, it's really been from here. Look at how these peaks have been lower and lower and lower. Okay, so it's kind of an arc, right? It's been getting lower, right? So that divergence, if you really think about it, on the monthly scale has been happening really since about December of 2020. Okay, so this whole time prices are going up, but divergence continues to get stronger and stronger, the divergence. And then as I mentioned before, right back here in August, the stochastic momentum index joined in on the fun, and now it's also diverging. Okay, so again, why is that a big deal? Because we have a huge amplitude difference between the bottom of the January candlestick and this 50-month moving average. Okay, so I've been saying it. We're going to get 1,000 point or more decline. Yes, it's going to happen. Right now, we're 1,500 points away from the 50-month. Okay, we're going to get more than 1,000 point decline, guys and gals. Just accept it. It will happen. Whether it happens in 2022, okay, I don't know. But it's coming. You can bank on it that the S&P 500 will lose more than 1,000 points. Okay, I'm not saying it's going to lose more than 1,000 points from where it's at right now at this moment, because we could go to all-time new highs. But basically, the point I'm really trying to make here is these two lines, this yellow one I'm drawing here, and kind of this one here. Okay, they continue to widen, right? The angle between these two continues to widen, right? This angle's, the distance between the lines is getting greater. Okay, it's not getting smaller, right? It's getting greater. You see how this angle over here got smaller? From here down to there, got smaller, right? Went from significant distance to medium, and then small, then really small, right? You follow me? So, if anything, this gap, this amplitude between the 50-month moving average and bottom of the monthly candlestick just keeps getting greater. So that means the 1,000-point drop actually could be significantly more. Right now, it's let's see, 33.43. It's 1,300. Sorry, I said 1,500 before. It's like 1,300. Okay. It was 1,500 just a little while ago because we were at 48.08 on the all-time high. So that's coming. More than 1,000-point drop is coming. Okay, let's look at the weekly. Let me go back to the monthly because one thing I didn't cover was the cycle. So that cycle low there, I think, is June. Yeah, so just be aware you got a cycle low out there in June 30th of 2022, which gives, some credence to the possibility that prices could decline going into the middle of summer, right? Kind of the beginning to middle of summertime, somewhere in that area. Okay, really anywhere from like May all the way out to September, right? Because this is a huge time frame. So expect prices, I think, to decline from late spring to early autumn of 2022. Okay, so let's now go over to weekly. Let me switch the drawing set over to the weekly chart. And the one, I don't really glean too much from the weekly chart because there's just, it's kind of always the same. Weekly charts to me aren't very powerful chart to look at, but for cycle analysis, it's helpful. And as I already mentioned, January 16th on the weekly and January 13th on the daily are really very much in synchronicity with one another. Okay, that's January 16th on the weekly chart and January 13th on the daily chart. So I'm inclined to think there's going to be, a significant enough to price decline going into the middle of January. So I just think that gives credence to that. Okay, let's switch over to the hourly. If you want the hourly chart, okay, a lot of traders trade on the hourly, or at least they want to set up and have a better sense for when to enter, okay? And sometimes I cover the 5-minute chart. And today I'm going to start back up covering the crude, the gold, okay, natural gas, wheat, and oats, okay? So if you want access to all that, the hourly chart for the S&P 500, all the other futures products, okay, $5.99. Okay, as I've been saying, if I give it away, if I make it any cheaper, I'm giving it away. Okay, it's less than the price of a pizza. Take advantage of it, guys. And I've already mentioned this. I don't get the $5.99. Google takes a big chunk of it because they're such a lovely organization. Okay, so take advantage of the price, guys and gals. All right, that's it for now. Subscribe to my YouTube channel. Don't forget to give me a thumbs up. Appreciate that. And click that little bell so you get notified of all the videos I'll put them out. Talk to you all real soon again next time.